Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 19th of January. ECB to remain on hold and to maintain a balanced tone. Yesterday it was the Bank of Canada. Today the ECB takes its turn. As usual, the policy decision will be followed by a press conference from President Draghi. At its latest gathering, the Governing Council extended the minimum duration of its asset purchase program until December, though at a reduced pace. Given that the bank took these actions only last month and that in the meantime data showed that Eurozone's CPIs accelerated in December, we do not expect any action from the officials at this gathering. We think that the focus will fall on how they view the outlook for inflation. The headline CPI rate for December surged and reached its highest level since 2013, but the core rate rose only marginally, which makes it unlikely for the improvement in the headline print to prove a game changer by itself. As such, we expect President Draghi's tone to be balanced today, something that may keep the reaction in the euro fairly limited. The main risk to our view is a very optimistic tone from Draghi with regards to inflation, something that could trigger a positive reaction in the common currency. As for the Bank of Canada, it kept its policy unchanged yesterday, and in the statement accompanying the decision, the officials maintained their overall neutral bias with regards to the Canadian economy. The reaction in the loonie remained relatively limited on the decision. However, the press conference by Governor Poloz was much more exciting. Poloz indicated that another rate cut remains on the table should downside risks materialize, which caused the Canadian dollar to collapse against its major counterparts. Dollar cut surged back above the upside support line taken from back at the low of the 3rd of May to hit resistance at 132.70. Considering this dovish remark from the Bank of Canada, we could see the Canadian dollar to remain under selling interest at least until the release of the nation's CPI data for December due out tomorrow. So a clear break above 132.17 dollar cut is possible to open the way for the 133.15 hurdle, which also happens to be the 50% retracement level of the 28th of December until the 12th of January down path. However, we prefer to remain neutral with regards to the broader outlook, as it is too early to decide whether the break above the aforementioned long-term uptrend line has turned the picture back positive or whether we are in a corrective phase of the 28th of December until the 20th of January downtrend. Now in the US, speaking on monetary policy last night, Fed Chair Yellen indicated that the US is near maximum employment and inflation is moving towards the Fed's goal, maintaining the upbeat tone she adopted at the December FOMC meeting. On the topic of rate hikes, the Fed chief said that the next increase in borrowing costs will depend on the economy over the coming months. Considering that US data have been robust lately, with December's headline CPI rate rising above the Fed's 2% target for the first time since 2014, Yellen's optimistic comments may have brought forth market expectations regarding the timing of the next hike. As a result, the US dollar strengthened against its major counterparts. Euro dollar slid back below 106.85. In our view, the short-term path of the pair remains positive, and as such, if the bulls manage to take the reins near the 106 barrier, we would expect them to aim for another test near the 107.25 line. A break above that resistance may open the way for the 108 hurdle. USD traders are now likely to shift their focus on Trump's inaugural speech scheduled tomorrow for any hints regarding the government's upcoming fiscal and regulatory policies. As for the rest of today's highlights, during the European day we get Eurozone's current account balance for November. In the US, building permits and housing starts, both for December, are due out. We also get the nation's initial jobless claims for the week ended on the 13th of January and the Philly Fed businesses index for January. In any case, none of these indicators is usually a major market mover. We have three speakers scheduled for today. UK Prime Minister Theresa May is scheduled to speak in Davos. After revealing her Brexit plans on Tuesday, we will closely monitor her comments for any further hints on the EU-UK divorce. Meanwhile, San Francisco Fed President John Williams will speak during the late US session, while Fed Chair Yellen will speak once again during the Asian morning Friday. We don't expect her to be in the spotlight this time, as she shared her view on monetary policy yesterday, which is very unlikely to change within a day. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.